Here, thank you.
Your Honor, through the chair, I'd like to put a motion in to excuse Councilman Pollica.
Support.
All right. Without objections, so ordered, if that's the right term. All right, next item of business would be the approval of the agenda.
I move that we approve the agenda as presented.
Support.
All right, moved and supported. That's when we can just say aye to, or do we have to have a roll call?
We generally have a roll call.
We'll do a roll call.
Councilmembers Martin,
Yes.
Piana,
Yes.
and Mayor Coulter.
Yes, thank you. The agenda is adopted. Moving on now to the agenda, which is one item, and it's the audit presentation, which we love to do every year in December. So, good evening. Welcome back.
Thank you. Thank you. So tonight I have passed out a hard copy of the audit presentation handout, and what that consists of is excerpts from the audited financial statements, the full report, and I added some charts and graphs. So it allowed me to make some notes, highlight some things, and add the charts and graphs. Hopefully you can follow along a little better because I start to talk fast. And so hopefully you find these handouts useful. A couple of general comments. Our thanks to the city for their courtesy, cooperation, and assistance, especially Cheryl and her staff for all of their help. We certainly appreciate that assistance while we were here in the field and beyond. This is definitely a collaborative effort to get the audit report done, and we do appreciate their help. What I plan to do tonight is to highlight what I think are the key areas, which is why I put these presentation handouts together. But if you have questions, feel free to stop me. We can go through those at any time. You'll notice that some of these pages in the handout have 2 page numbers. I'm going to refer to the page number off to the lower right-hand corner in red. The page number from the center of the page is from the bound report. So I'm going to refer to the page number of the presentation. And pages 1 through 3 of the presentation make up the independent auditor's report. And I've highlighted a few sentences here. First sentence I've highlighted, the preparation, the fair presentation, and the internal controls over the financial statements are management's responsibility. Our responsibility as your auditors is to express opinions on the financial statements based on our audit. Our opinions are actually expressed on the second page of the presentation, and we refer to this as an unmodified opinion, or unmodified opinions for each of the opinion units of the city, which is the highest level of assurance that we can provide as auditors. That's as good as it gets. It's that unmodified opinion.
Unmodified, that's the key word. Okay.
Yeah, we used to call it unqualified. Nobody knew what that meant. So
Yeah.
now we call it unmodified, and it's so much
Okay.
clearer now than it used to be.
Excellent.
The third page of the presentation is just the ending of the opinion,
Page 3.
the independent auditor's report. And then we get into the government-wide financial statements. Starting on page 4, we have the statement of net position. And the statement of net position is a full accrual financial statement. Government-wide financial statement is prepared once a year. So the only time you see these government-wide financial statements is in your audit report. They primarily have a long-term focus. And I've highlighted just a few things here on this page. Statement of net position is a snapshot as of June 30th, 2016. For the governmental activities in the left-hand column, your current ratio is your current assets divided by your current liabilities. For governmental activities, that was 5.79, so you can cover your current obligations 5.79 times with your current financial resources. For the business type activities, which would include your water and sewer and your parking funds, your current ratio is 5.19. So again, you can cover your current obligations more than 5 times over. So that's
If I may, through the chair, what's a healthy rate to be at for these numbers?
Well, we don't really have a benchmark to give you on the government-wide statements because it really depends on, you need to compare yourself to yourself over time to see how well you're doing or aren't doing. But obviously, you don't want to be less than 1. If you're less than 1, you're not meeting your obligations.
Sure.
Last year, you were at about 2.5 for the governmental activities. You're at 5.8 now, 5.79. Last year for the business type activities, you're at 4.2. So you improved in
They've
both.
increased it.
Yeah, in both areas.
Do you have a sense of where some of our neighbors are?
I off the top of my head?
No, I'm fine.
No.
I'm just curious if you knew.
No, we can find out for you.
Yeah, it's all public information, and depending on when they are uploaded to Treasury's website, it might be out there now.
We
for
can
some
look
of
into
them.
that.
I'd be curious to
Yeah,
know. Just
absolutely.
bragging rights, whatever. Thank you.
Yeah. The other area that I like to look at is the unrestricted portion of your net position. So your net position is your equity, your assets minus your liabilities is your total net position. So for governmental activities, your total net position is $34 million. Of that, there are certain amounts that are earmarked for specific purposes or restrictions and invested in capital. What you have available is the unrestricted portion. For governmental activities, it was $18.8 million approximately, and that represents about 71% of your annual expenses. For the business type activities, you're at $9.7 million, and that's about 95% of your annual expenses.
95%.
Yeah, and we'll get into that. The business type activities, as I said, includes water and sewer and parking. We'll get into the water and sewer fund in a few minutes.
Okay. And just to be clear, the unrestricted, but we have internally restricted that is not considered unrestricted in
Yeah, I think that's the next page too. I think.
for
Well,
audit purposes, but we have
Like
sort of
assigned or
council
committed.
restricted, but not.
yeah, we'll get into that. So, because the governmental activities is really all of your governmental funds, your general fund, your special revenue funds, your capital projects, debt service, all rolled up into one, but it's on the full accrual basis. That's not what you're accustomed to seeing throughout the year. What you're accustomed to seeing throughout the year is your fund level financial statements, which start on page 5 of the presentation. We get into the governmental funds. And the governmental funds are prepared, the financial statements are prepared on the modified accrual basis of accounting. So it has a current financial resources focus, whereas your government-wide statements had a long-term focus and they're full accrual. So this is a more familiar presentation for you here, starting on page 5. The balance sheet is also a snapshot as of June 30th, 2016. I'm going to focus on the general fund as the operating fund for the city. So in the left-hand column, we look to, again, the equity section, which is fund balance on the modified accrual basis. And you've got the different categories or classifications of fund balance. So you've got non-spendable, restricted, committed, assigned, and unassigned. You can assign fund balance all day long. That is an internal management tool to earmark fund balance. So collectively, we look at your assigned plus your unassigned portions of your fund balance, and that is known as unrestricted because there aren't external restrictions placed on those dollar amounts. And so your unrestricted fund balance represents approximately 27% of your annual expenditures and other financing uses, where at June 30, 2015, you were at 30%. So it did decrease a bit. You did spend some of that down. But still healthy. The Government Finance Officers Association, we do have a benchmark for this one. The Government Finance Officers Association recommends maintaining a minimum fund balance in your general fund that is equal to 2 months' worth of normal operations. So 2 divided by 12 is about 17%, and you're at 27. I don't consider 27 to be excessive. I think you're healthy. And the GFOA, it is a minimum 17%. So I think you're doing just fine, and I've got a couple of charts and graphs here to highlight that, actually. I'm a few slides behind. Quit talking and get caught here. All right, so I've got a bar graph up here. It's in your packet as well. But on page 6 of the presentation handout, we've got your statement of revenues, expenditures, and changes in fund balances. Again, focusing on the general fund in the left-hand column. Total revenues for the year, just over $21 million. And as you can tell from the graph, that is a bit higher than it was in 2015. The expenditures, just over $19 million, and that also is a bit higher. So you can see that the 2016 activity is the highest it's been in the 5-year period that's included in the graph. You actually added to your fund balance $347,000 for fiscal year 16. But over the course of the 5-year period, that yellow bar represents fund balance, and as you can see, you've maintained a healthy fund balance throughout that 5-year period.
If I may, through the chair, the way this graph looks like it, that there's a healthy, you're right, activity where you use in revenue, but also in expenses. At some point when we're talking about the budget, it would be nice to know where the increases came from in 2012 to 2016. Like, was it all healthcare? Was it all, because it's I consider this a fairly conservative financial council, and I'm surprised that there's that increase there. Mm-hmm. Thanks.
I do have a couple of pie charts here that follow. This is page 8 of the presentation handout. The first one being the general fund revenues. This shows you the composition of your revenues. Of course, property tax being your largest source of revenue at 47%. That is followed by intergovernmental. That includes your state shared revenue, your sales tax, That's at 17% for 2016. And then on the expenditure side, it's a little difficult to see, but your largest use of funds for the general fund is public safety at 48%. That's followed by general government at 27%. So these are your two largest uses of funds for the general fund. And this is a line graph that shows you that unrestricted fund balance as a percentage of your expenditures and other financing uses. And as you can see, you've ranged between 25 and 30% over the past 5 years. So again, you've maintained that healthy fund balance.
But if, again, through the chair, but again, the denominator's been increasing on that, right? So,
Yes.
Okay.
Right.
All right. Then, starting on page 10 of the presentation handout, we have the statement of net position, which covers your proprietary funds, your business type activities. That does include your water and sewer and your parking. I've highlighted the water and sewer fund as your only major enterprise fund for the city. I didn't put it on here, but your current ratio just for the water and sewer fund is 3.99. That was an increase from the prior year. It was 3.26 at June 30, 2015. And then the unrestricted portion of your net position is about $7.5 million. If you compare that with your operating expenses, factoring out depreciation, because depreciation is a non-cash expense, that $7.5 million represents approximately 67% of your operating expenses, less depreciation. And a year ago, at 2015, it was at 65%. So it did increase a little bit. Again, you talk about benchmarks, and it's really hard for me to give you a benchmark because it really depends on the age of your systems. If you've got aging infrastructure, your water and sewer systems, it needs to be replaced, you're going to want a higher net position, unrestricted net position, to help finance that when you need to replace it or repair it and so forth.
But and maybe this is a question for April, didn't the lawsuit affect the balance of that? Like, not in the last year, compared to 2 years ago, or?
It was last year.
Yeah.
So
it was last year
when the expense hit, it was last year.
Yeah, okay.
Yep. So if you turn to page 11 of the presentation, we've got the statement of revenues, expenses.
Go past 10, I apologize.
Sure.
The accounts receivable for water and sewer is $2.1 million. We really have that many unpaid bills out there? Is that what that is? You see your cash and investments at 4.1, but accounts receivable is 2.1 million?
Well, we make an assumption of unbilled as well. So if your bill is due to go out in July,
I see.
we do a calculation for that because we've supplied you the water, but we haven't sent you the bill yet.
Thank you, I understand.
Oh, okay.
Good question.
So that's not
Yep.
what we would traditionally think of as an account.
This is receivable, yeah.
Okay.
Thank you, I'm sorry.
Okay. On page 11, the statement of revenues, expenses, and changes in net position, again focusing on the water and sewer fund. Operating revenues, just over $8 million. That was an increase of about 4% over the 2015 revenue. The operating expenses, about $9 million. That was a decrease of about 30%, but it's the lawsuit that was included in last year's expenses. That lawsuit, $4.2 million, or $4,250,000, was reflected in the expenses last year, and you don't have that this year. And as you read down the column there, the third number from the bottom is your change in net position, a use of net position of $453,000. So as you can see, your expenses exceeded your revenues in 2016. The maroon bar is a little bit higher than the blue bar, so there was a decrease in the green bar. On page 13, I've got another bar graph here that details the components of your net position for the water and sewer fund. And this breaks it down into the unrestricted net position versus the amount that's invested in capital assets, net of related debt. The blue portion is that capital asset number, and the maroon portion is the unrestricted net position. And here's a line graph for the past 5 years comparing the unrestricted net position to the operating expenses less depreciation. And so, as you can see, it was relatively flat from 15 to 16, but you see the big decrease from 14 to 15, again related to that litigation. We did include a report on internal control over financial reporting. We had a couple of issues that were noted. Management has provided their corrective action responses, and they're included in this letter. The city did experience some transition over the past year, not only in their systems but also in personnel. So I see these as being resolved for next year. There really wasn't anything that stuck out in my mind as a problem, but there are things that we needed to tell you about. So that's what we included in the report on internal control. And then
On page 15 for the
Sure.
unfavorable budget variances, one of your findings is, well, that's your finding, unfavorable budget periods. But then you say a similar issue was noted and reported in our prior audit comments. Do you mean prior in this report or in prior audits?
last year, in 2015.
Okay, so it was uncorrected?
Well, it's a different budget. It's a similar issue, but it's a
Right.
budget variance. You had budget variances last year, you had budget variances this year.
Okay.
Any other questions on that letter? All right. On page 17 of the presentation, I did include a page out of the notes to the
So I'm
financial.
sorry, hang on one second, I'm
Sure.
sorry. So when you talked about the effects of the personnel change, was that in relation to cash and investment reconciliation?
Yeah, the
Yeah.
bank recs.
Yeah. And do we think that we're on track
Oh,
to do
we're
those
already
things?
correct, yep.
Timely.
And
Okay.
the new system will help a lot in that as well. So it was a transition from not only a new finance director, but a new software. And actually, the new policy is already been implemented and moving forward is already taken care of for next year in all of these instances, except for the variance one, which is a difficult one in general to manage. So
It is.
we're going to work through that as a team.
Okay.
And I will say that budget variance comment is fairly common. I've done a ton of these presentations this year, and this is in a lot of them. So it's not all that unusual or unique to Ferndale. So. But very difficult to guess what those budget amendments need to be for the end of the year. So.
Gotcha.
On page 16, I guess I don't understand under what circumstances we have old checks sitting around. Like, what creates that opportunity?
I'm going to let Cheryl comment on that. The unclaimed property.
Yeah, the few that I looked at, there's actually surprisingly like 3 or 4 that are payroll checks that weren't cash. If you get a regular
Wow.
payroll check and then maybe you get like a $50 reimbursement,
Yeah.
you kind of forget about it and you don't cash it.
It would, but yeah.
I know,
Kind of forget about it.
Right, okay.
Especially you're used to getting like a direct deposit.
Yeah,
So I've just put some things in place going forward to review that every couple months and make sure. Sometimes you have a vendor, you send them a check, they don't cash it, or they don't, or maybe it got lost in the mail and they don't miss it. So we're implementing a reminder system. Hey, we noticed you have a check, it was like 30 days, do you still have it? Do you need another one? Stuff like that.
Right.
So it's just little things like that. The payroll things, most of them are just somebody gets a side check that you stick it in a direct deposit, and like maybe stick it in their pocket or on their dresser or whatever, and forget about it.
okay, thank you.
Right.
All right, then on page 17 of the presentation, I did include a page out of the notes to the financial statements. We have several new accounting standards that, or you have, I should say, you have several new accounting standards that will have to be implemented over the next couple of years. Some have more significance for Ferndale than others. I've highlighted GASB statement number 75, and this is your accounting for OPEB, your other post-employment benefits. That obligation will need to be recognized in full for the fiscal year ended June 30, 2018. Right now, you do recognize a liability, but the liability that is currently recognized in the statement of net position is only the unfunded ARC. It is not the full liability. To give you a sense of what that change will mean to Ferndale, if you look at page 18 of the presentation, again, another page out of the notes to the financial statements. Currently, you've got recorded $5.4 million in OPEB, a net OPEB obligation. But your latest valuation, actuarial valuation, shows an unfunded liability of $38 million. Ooh. So the difference between those two numbers will have to be put on the books, statement of net position for the year ended June 30, 2018, and you'll need another valuation done. So that number is not it won't be exactly the difference between those two numbers, because you do need to have another actuarial evaluation done before it can be recorded on the statement of net position. It was never required to be there before, the full amount, and it will be in 2018. So for 2017, the note disclosures will change. It will give you a better idea of what that additional liability will be, and then in 2018, it'll end up on the statement of net position, the full accrual financial statements. It will not affect the general fund.
Yeah, I just want to clarify too that while it looks very similar to the pension rules require you to make sure that you are meeting that obligation. OPEB does not at this time does not require you to to fund what the actuary says you should fund. I will tell you though that while this number is eye-opening, we are actually in a much better position than a lot of communities are. Some of them are in the very low, under 10% funded. So, obviously 27% is not exactly exciting, but it actually is in the world of government. We're actually doing better than a lot of people who have hardly funded it at all. So I am correct in that we're not, that what I just said, correct? As
Yes,
the part
that
of
is
the
correct.
not being counted as,
Yeah.
because that was my first thought too, was they were going to start to make us pay that ARC every year, which would be crippling to most organizations, but that is not the case right now. So.
And actually, on the pension side, when the pension standards came into effect, you have a net pension asset, which is also
Right.
Yes.
unlike most of my clients.
Correct.
So,
It must be that phenomenal pension board.
Yeah, that's right.
Standing board, isn't it?
It's an outstanding board.
Yes.
Taking that one out.
so I just wanted to give you a little bit of a heads up on what's
Yeah.
on the horizon there. So.
Excellent. So does anyone have any questions? Any additional questions?
I have a comment. This is terrific. Thank you.
Thank you.
Yep, wonderful. I guess that's it. Thank you, sir.
All right, thank you.
Appreciate it. All right. And seeing no other business for this
Do we
meeting?
need a motion to accept the report?
Oh, do we need that?
I think
Yeah?
so.
Okay. You should. We should,
I
okay.
move to accept the financial audit as presented.
Support.
Moved by Piana, supported by Martin. Any comments or questions about the audit? All right. Marnie, would you call the roll, please?
Council members Leaks May,
Yes.
Martin,
Yes.
Piana,
Yes.
and Mayor Coulter.
Yes, thank you. And with no further business, this meeting is adjourned.
Just in time for the next one.
Just in time for the next one.
We do love our Decembers.
First time we had a consolidated
Quite a few.
meeting.
Since I've been on council.